All right, we are back, everyone. Welcome back to another Solid Report. I am your host, Sam Badawi, aka Samsolid, aka your boy Yeezy. All right, anyways, let's get right into it. Woo! Everyone's getting ready to go on the Wolf channel, right? Like a lot of you guys are learning. I love it. I love the fact that you guys are learning. I'm gonna post the link to the show on the Wolf YouTube in case you're on my channel, but I think a lot of you guys are starting to get it, which is great because I'm not going to be posting on my channel soon. What's going on Midwest? Man, this guy's always in the clutch all the time. I appreciate you, Midwest. I appreciate you. But I don't know if the market appreciates UNH right now. I mean, this is not a good stock right now. Whoops. Hold on. Boom, boom. Yeah, this is not. It is not a pleasant stock right now. Okay, is that thing fixed? What's going on here? Fool? All right, hold on. Yes, sir. Go on the Wolf channel. That's what I just shared in there. Oh, you got both lists, man. You're showing some love, man. I really appreciate that. All right, so we got a pretty, I don't know, it looks bullish on the hood, right? Above the hood, it looks pretty bullish, but under the hood, I mean, it's pretty bullish under the hood unless you're a UNH bag holder, but I'm sorry, shareholder. But I mean, if you really believe in UNH, if you really believe this company is going to come back and you bought it in a low 220s, low 225s, and you really think it's going to come back, then you should be excited about this, right? But if a stock goes down, right? I mean, no one really is excited when their stock goes down. Like, it kind of sucks, right? People say, oh, I'm happy to buy more if it goes down. Okay, maybe if like you weren't the full size, whatever it is. But I mean, I don't think anyone is really happy that the stock is 20% down. I don't know. Maybe some people really like their stock down 20%. Me personally, if my stock was down 20%, I would not be happy about it one bit. But I mean, other than UNH, Qs are up 95 basis points. SPY is up 50 basis points, and that's about to hit a new all-time high. I think we got new all-time highs in the house. Yeah, we got new all-time highs, baby. We got new all-time highs. Bad day to be a Dow Jones investor, but to be completely honest, I don't think there's too many Dow Jones investors up in here. I think a lot of you guys are tech-heavy, and the market is very tech-heavy, especially when it comes to a day like today. I mean, Amazon is up 2.5%. Let's go. So Amazon is coming up into earnings right where they opened the day after the previous earnings. I mean, unless like things fall off a cliff, I'm expecting Amazon to post like a 20% for AWS. And that's a very high margin business. You guys know the bull case with Amazon. I am bullish on Amazon. It is a big part of my portfolio. And I really think that the market is not understanding it. As remember, Amazon owns a lot of Anthropic, and they own it pretty early. So that and its own is a very bullish take right there, because we remember what happened in 2021 when Amazon had a massive stake in Rivian. Now, Rivian was in the hundreds back then, so it's clearly not there today. But if you go back to 2021, Amazon was killing it, right? And there was a whole thing where it's like, oh, they own a lot of Rivian. Rivian like went through the roof, right? Rivian went all the way up to let's see this over here. Rivian IPO'd around $178, and that was in November 21, probably the worst time to IPO. But if you remember, Amazon got a lot of good news around that time, right? So this is like where Rivian went IPO. I mean, you know, Anthropic is a much better company than Rivian, in my opinion. It's obviously part of the secular trend. At the time in 2021, EVs were the secular trend, but today it is clearly AI. And Anthropic is coming pretty close to OpenAI. In fact, they just released this well, not they released this information today, but in fact, hold on, I'm just going to pull up the tweet over here that Ahmed posted earlier. According to Financial Times, let me just share this screen. Yeah, according to Financial Times, oh, am I sharing the right thing? Okay, cool. We have Anthropic is doubling their fundraising plans from 10 billion to 20 billion per Financial Times. This will value the company at 350 billion as investors' interest is now 5 times the original size of the round, right? So it's supposed to be a $4 billion round, ended up being a $20 billion round. And they went from 1 billion ARR to $9 billion last year. This company is growing very quickly. And I would even argue, considering the recent sentiment we've seen, OpenAI has really catered to the consumer, right? So $20 a month, you get access to GPT 5.2, you get access to GPT-O and all that nice strawberry stuff, whatever it is. But for Anthropic, this is really more catered toward not only the consumer, but also enterprise, right? We're talking about building code much faster. You don't have to be knowledgeable in coding whatsoever. Anthropic will do a lot of that for you. And when you apply things to the enterprise, those are very big contracts you're signing. And Amazon owns, is it 20%? I think it's 50. I think it's 10 to 15% of Anthropic, but still a good chunk of Anthropic, and they invested in it very early in the game. So kudos to those early investors who were in Anthropic. I unfortunately did not get an opportunity to. I know Chamath and his crew did. Was it Chamath that got a bit early in that one? No, I think it was something else, and then they got acquired. It was a company that went to NVIDIA. Hold on. Grok, that's right. GROQ. That was the one with Chamath. But anyways, guys, I mean, the market is definitely bullish today, and it's great to see. It's great to see because we've just been chopping left and right. In my opinion, I think we're still in a range here, but we definitely look a lot better. We still have this little channel that we've basically been in since early September. Kind of broke into this channel, got rejected around October 10. This is the weekly chart. Let me go to the daily chart. Kind of been bouncing back and forth here, and it looks like we're kind of coming up out of this channel. So we really need to test it, and I think we're going to find out in earnings, right? We're gonna have mega caps report tomorrow. If I pull up the earnings hub, the earnings hub over here, we have Meta reporting tomorrow, ServiceNow reporting tomorrow, which is a big name. I know a lot of people are interested in that one. I'll give my input on that one possibly later on. I'm going to be on that stream tomorrow with a Couch Investor as well as Jose. We're all going to be watching and listening to the Tesla earnings call, most likely. Meta is reporting, Microsoft's reporting, IBM's reporting, and a bunch of other companies. Lam Research is reporting. That's a big one too, and that's actually at a wow, that's already a $300 billion market cap. That's insane. And then Thursday, Apple's reporting, and then next week we have, of course, the other big guys reporting. We have Google, AMD. Amazon is on Thursday next week. Iron is on Thursday next week, which I'm probably going to stream as well. Might end up doing that with Amin as well. Reddit. There's a lot of, what is it? Oops, my bad. I was going to look at this one right here. Is this? Oh, that's Bloom. Wow, Bloom Energy is reporting next week too. Wow, that's going to be a big one. So it is definitely not going to be a quiet next couple of weeks. And we're literally coming onto the pinnacle of earnings 4 times a year, right when the Qs are hitting the upper end of the channel near its all-time highs, right? The all-time closing high. I usually like to go by all-time closing highs whenever it comes to the ETFs, because these aren't futures markets. They're not traded 24/7. I mean, yeah, you have the overnight markets, but futures markets are really the ones that are traded a lot. Yeah, what's going on, Mr. Evans, sir? Mr. Stock Market News. How are you, sir? Hello, Mr. Weed. Oh, okay. Wow, I didn't see that one coming. But all right, hello, what up? No, all right. The feds are listening, so I don't want to talk about that one. But the all-time closing high on the Qs was 635.77. We still have less than 1% to go, but arguably, like, this has just been bullish for a long time. And I went over these charts before for the last couple of weeks. Honestly, I got a little bit bearish over here, but I held the nose and I bought the dip. And in fact, it was this day right here when it was pretty clear that the market was not going to go lower, because you saw a lot of strength in high beta. Whenever you see high beta leading the market up, that's usually a pretty good sign that risk is still in the market. And we didn't exactly have that massive breakdown that we all saw. And then what we saw this week, well, a lot of these mega caps coming back. You had Meta coming back, crawling up below the moving averages. You had Amazon come back. You had Microsoft come back, which is a very big one, $4 trillion company. You had Apple come back. Google has been afloat in the sky the whole time, which is great. Tesla's reporting earnings tomorrow. Imagine if Tesla goes to 500 bucks. We're easily in all-time high territory on the Qs. I mean, you know, barring any events, you know, we're going to have to wait until NVIDIA earnings, of course, for the behemoth, the AI godfather, the king, the ruler, the Pope, and all that stuff you want to say about Jensen Huang, who in fact is just having the time of his life in China right now. He is not. If you ask anyone, hey, do we need to worry about an AI bubble? And you look at Jensen Huang, like the dude is not. He's not concerned. I think he's lived through many, many bubbles we've had so far, and I personally don't think this is ending anytime soon, and I don't think he does either. But you know, it's not really in his best interest to really say if he really thinks it's ending or not. If he does, I doubt it though. But yeah, we'll see what's going on. What's going on, Dividend Degenerates? What's going on, Caroline? How are you? All right. I don't know what that means, but yeah, Midwest, you're the boss right there. Stock market news. Evan, how are you, sir? All right. So let's get to, oh, Mimi, I forgot to say hello to you too. How are you? All right. So let's continue on with the show. We kind of looked at the markets a little bit. There was also another name over here that was, that's not really doing too well today, which has been a very hot name in the sector. Also, advertising has been very hot in the sector. And I'm not necessarily talking about AppLovin, because AppLovin is actually doing pretty decent today, but very well off of its all-time highs. It's suffered through multiple short reports in the last few weeks. Latest one is talking about money laundering, which is pretty insane. I mean, it's just they're always taking stabs at this company. Nothing ever sticks. I mean, we'll see if that actually comes true or not. But, I mean, Wall Street is definitely a big fan of this one. The only problem is that it's coming down here to the 200-day moving average. Another name that is getting hit pretty hard today, let's see if it's still getting hit here, is Reddit. This thing is down 8% today. 8%. That is definitely not a small move down at all. Oh, wow. Booking.com is back over 5,000 bucks. Congratulations. Yeah, this is not a good move at all for Reddit. I mean, it might be a good move if you're looking to buy the dip in this thing. Maybe this is your opportunity. But for me personally, I don't think there really is a clear indicator as to why this stock is down. In fact, they actually did get some good news lately, but there was an analyst that, hold on a second here. Let me just bring it up right now for Reddit. Did I already? No, I didn't save it in my notes. Interesting. I didn't save it in my notes. Hey, Sam, why don't you save your notes? I don't know why. I'm just saving notes, but let me pull it up over here real quick. And okay, here we go. So, oh, no, I'm going to share this one. All right, so we have Reddit over here. Yeah, it's basically trading on the same place where I took the screenshot this morning. Reddit's down either due to the EU increasing scrutiny on social media platforms for minors, or because Cleveland Research flagged a potential slowdown in advertising revenue this year. Either way, the stock's below $200, right? So you have all this news coming out that isn't exactly good for Reddit, apparently, which I'm about to play a clip from video on CNBC, which is like the other side of it, but the stock is still down. Anyway, so I posted this one yesterday saying OpenAI basically gets 40% of its AI facts from Reddit, right? So this is just as much as Wikipedia. It is the contribution comes from the public, right? There's no one like fact checking a lot of this stuff 24/7. Someone can post something in there, and yeah, there's a lot of people looking at the boards and whatever, but like it doesn't come in the form of Wikipedia. Wikipedia actually gets modified in real time, but at the same time, like this isn't like high level research, or could be, but a lot of it's 40% is coming from Reddit, right? So I think the question that Wall Street's kind of having here is like, you know, if you have a lot of these other, in my opinion, this is what I think is happening, because Reddit, they have amazing profitability. They're growing pretty quickly. They're expanding across the entire world as you get more of that smartphone penetration and internet around the whole world. And I've used Reddit many times to, I don't know, figure out some issues that I'm having, maybe with the house or plumbing, whatever it is. I've used it for a lot of plumbing, surprisingly. I don't use it for stocks. I've never used Reddit for stocks. I know there was that whole Wall Street bets thing a long time ago, and I certainly don't use it for stocks. It does actually come into good play when you're looking up like some research or some news that's possibly coming out, because there's a lot of boards and everything talking about like ASTS, for example, that I actually did find some stuff in ASTS in there, but always trust but verify, or I guess you don't need to trust, but you always got to verify either way. But maybe that's a scare here, right? So when you have these LLMs able to scrape data in real time across multiple platforms and search engines and so on, Does that mean that Reddit is going to be not serving as many ads as it's supposed to? Because that's really what its moat was coming from, right? It's serving a lot of ads to these people that are going on Reddit to talk to each other, and the user growth is increasing. But as LLMs become more popular, is the market front running that scare that Reddit might be in trouble later on? And let's go ahead and see what CNBC has to say as far as the Reddit news this morning. Intercontinental Exchange launches a new tool with Reddit to use conversations as market signals. So I'm going to go ahead and play this right here for you guys.
Today on the launch, Intercontinental Exchange President of Fixed Income and Data Services, Chris Edmonds. Chris, appreciate this very much. Good to see you.
Good to see you. Thanks for having me.
It sounds fascinating. I mean, there's so much intelligence, or at least arguably insight, that's in there, and you got to harness it somehow. How long has this been in the works?
It's been a few months. The biggest thing is, in a world where everything is moving at a greater frequency and a higher velocity, you don't know which one of those you're going to get caught in at any moment in time. So being able to process the level of data and the sheer volume of data into something that's usable has really been a challenge facing the industry. So for us, by applying both AI and our data science capabilities and having access to Reddit's massive, very deep conversations going on across their platform is really what led to this innovation here and what we're proud to put out into the market today.
Can you give some examples of tools or triggers that you can pull and what you get in return?
It'll be a lot of user-defined. We don't determine trading strategies at the end of the day. What we want to do is empower them. So if you have a trading strategy on your desk every day, you're using our data in order to make decisions of when to engage or to not engage, depending on what the subject may be. We're giving you that raw, ingestible format that you can take in there, and that way you're not guessing whether or not you got the right last headline, but you're actually able to see that signal and the sentiment along the way. I'll give you one example. We started seeing stuff about the Japanese yen before Christmas in the data. As soon as the snap election happened was announced on January 19th, we saw the signal become a sentiment and immediately go negative along the way. You're going to be able to see that entire trend as you use the service on a go-forward basis.
Who is the you? Like who are you selling this to? Is this for institutional investors?
It is for institutional capital markets. That'll be the primary. That's who ingest our data today in all forms of fashions along the way. It'll be open to everyone, but it's primarily catered to someone who has a very sophisticated platform and program of transactions that they're attempting to manage the risk on, and they want to put that in one more confirmation bias in their trading strategy.
I wonder if it feeds the view that, the institutional investor is going to sort of take advantage of the little guy, right, by being now a few steps ahead of them and try to bet against them.
I would say it's probably more of a democratization, Sarah, on that, because now everyone will be able to see that. It's so widespread, the amount of data that people are looking at different times. So you and I may see the same data, we may see it at a different time, but for very different reasons along the way. I actually think it brings more investors together around the same level of information to express the view that is most important to their portfolio.
From a tech standpoint, Chris, is this hard to do? Is this a challenge? And are there innovations that's going to let you do even more in the next 5 years?
It is a challenge. I think managing data across the board has been a challenge because there's so much more of that. My earlier comment about both frequency and velocity, there's so much moving around at the time. What do you do to capture the right information at the right time? Certainly AI has been helpful to us as data science has become a bigger part of the trading community along the way. It has been for years. People were buying satellite images of Walmart parking lots and things of that nature. This is sort of the next evolution in that. The more that we can get that efficient and the more users begin to incorporate this into their trading strategies, they will get better at asking us, how do we provide that next level of data to them? So I do.
All right. So this is kind of interesting. So what they're basically saying is that they're partnering with Reddit to give signals ahead of time for the market. And his example was the Japanese yen issue that happened, and that they were able to see the signal well before the incident actually happened. Now, I don't know if you guys know, but ICE is not the ICE that is talked about, the federal agents. Like, no opinion with that one. Like, we're not going to get into that in the stream. It is an actual company that's traded publicly in the markets. Let's actually take a look at their chart over here. And it was pretty fun. I saw QCAP on Twitter mentioned it the other day. I have forgotten. ICE is involved with the stock market and trading futures and stuff, mostly commodities and FX, but they've been on a tear for a long time. I think a lot of this really comes from the fact that people are looking forward to making decisions on the market in real time versus doing a lot of overnight exchange moves. But specifically, as retail gets a lot more access to like non-equities or things outside of equities, this becomes of more of interest. But arguably, like, this company has been doing pretty well for a long time. And it's like this stock does not go down. I mean, as long as the stock market exists, this stock will pretty much always go up. And here they are, they're trading near an all-time high. Interesting chart too. Wow, I actually should look into that one. But what they're basically saying is that they're able to capture market signals through the use of Reddit. Look, alpha only lasts for so long. It's not going to last forever, right? Because once a lot of once a lot of institutions capture the alpha of a move, it starts to lose its dominance, right? It starts to lose its positive effect because everyone's doing it at a certain point, right? So think about poly markets when they first came out. Like, there's a lot of arbitrage that people could play over there, where it's like, if you kind of knew an event was happening based on the stock market, you can get ahead of it in poly market if you miss it in the stock market and capture it. But now there's so many algorithms hitting it out there that, well, what edge is there to use in poly markets anymore? You know, when you can just bet on stocks or something. Like, I'm sure, I don't think poly markets or prediction markets are going to last for a long time. I think that's been a huge trend lately. But I think it's probably going to die down sometime in the future, mostly because it's just going to become a commoditized industry, right? So everyone's going to start doing it. And in one way or another, it's going to get factored into, let's say, stocks in real time. And when they start doing that, then, well, what's the point in logging into Polymarket? You can just do it like right through your brokerage, right? So that's what Robinhood is doing. And eventually they're all going to start having, I know Webull has that too. Like, they're all going to start having it. And at a certain point, it's like everyone's doing it. It's no longer with who's doing it better, who's doing it more conveniently, where I don't need to download or create an account somewhere else, put some money somewhere else. I can just do it right in my app. And that's the reason why Robinhood is doing so well, is because they're able to bring that to the user. So we will see. We will see. Yeah. So I actually did not stop the stream on my channel. So I'm going to go ahead and do that again. If you are on the Solid Finance channel or the Sam Badawi channel, turn into